Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Quick Market Analysis, where we understand the markets using the technical charts and then try to plan for a better trading day. That's tomorrow, March 12th, Tuesday, 2024. So we had a sharp fall on both the indices, Nifty and the Banknifty today from the top, Nifty especially from the all-time high levels. And it has fallen and seems to have paused slightly at the support zones, and looks like it's profit booking. But the bearish patterns are yet to be confirmed tomorrow, so let's try to understand more. So this is the wrap up. Details are updated. If you want to take a screenshot, you can do that, but we would come back here after looking at the charts first. Basically, here you have Nifty charts. Let's just take out the Bollinger Bands and hide this and see only the candles. Look at this. So that's a wide range bearish candle, clearly bearish, and it has formed a potential bearish 3 candlestick pattern, 3 candle bearish pattern, basically known as evening star. We have a bullish candle, you have a small body indices candle after that above it, and then you have a bearish candle that confirms it up by going below the indices previous candle. So if the price moves below the today's candle low, then that's confirmation of a very bearish pattern. But the very bearishness depends on which time frame. This is daily time frames, so the bearishness has not come on a weekly time frame. It would have been even more worse, right? Only if it confirms. So there is a potential bearish 3 candle formation that is seen there, but otherwise single candle, if you look, it was wide range bearish. Banknifty, you see a similar one, but the this is also a 3 candlesticks bearish pattern, but the middle candle of this Friday is not very small, but compared to the bullish green and today's bearish red, the indices, the size of the middle candle is small. So that way this also can be a potential evening star, you can say, but not confirmed. Confirmed if the price moves below today's candle low. So otherwise you can see that this also has paused right at the support zone for a potential change in polarity bounce that could occur from the zone. That is, this is exactly the same place where the 47,300 is where the price had broken out to go as high as 48,200, and then it has fallen back to the same place from where it had a resistance, and that resistance could potentially turn out to be a support, and then it can bounce up from here. That's what change in polarity concept. So there is a potential for that. Again, that is also not confirmed. The fact that it didn't move further down from that support is a good thing. It's on the Banknifty that we are seeing that. In the Nifty also we can see that. We see that on March 1st we had taken out that congestion zone and then moved from 22,350 nearby zones to as high as 22,525 somewhere. So it has fallen back to the same place and did not go breaching that. So that means again there is a change in polarity concept here, where the previous resistance is acting as a support and potentially paving way to a change in polarity bounce up move from here from tomorrow. But that's why this support is crucial. Okay, now let's look at the where exactly the candle is placed. So there is some space as far as Nifty is concerned. As high as 22,850 it could have gone to channel top, but it has paused here. So it's in a trend line channel. No, it has been there since a very long time, from December, and it continues to be there in that. And support resistance, if you look, the first, basically another small consolidation has formed now, and the first resistance, of course, the all-time high at 22,500. It's a rounding number as well. Then it can go as high as 22,850. So every 100, like 22,600, 22,700, 22,800, these are all resistances because it's an uncharted zone. Right, but the channel top extends to the 22,800, 850 zones. Now the supports, first support would come in as the low of the 6th March. It's a previous string low that comes at 22,222. So very close by you have the 22,160, which is the 20 expansion moving average, that also could be support. Then comes the 22,000, because big rounding number support, and then after that 22,800 is the 50 expansion moving average support that comes. Banknifty, if you see, we understand that there is a blue channel. It is still in that blue channel, no problems there. But remember that it had fallen down from this blue channel into the bottom yellow channel multiple times, and finally it managed to break out. Alright, about the 20 expansion moving average and W pattern potential, all this is there. Now it has slightly taken a retracement, no other problems. It is still in the blue channel. Just not fallen back from that. So until it falls back from there, it's below the 100 expansion moving average at 46,000, everything is fine. Right, but if you look above, that blue channel has a lot of space to go. And Nifty had not made the all-time high yet. Well, Nifty had made that multiple times, 3 weeks consecutive all-time highs, but Nifty took a pause just 500 points away from that, and now it's falling back to the previous resistance zone, acting as support now, and then probably it may be climbing back up, or it could break down and go back to the bottom of the channel, or it could go further down or retesting the previous swing lows to as low as the 45,200 expansion moving average. So all these properties are there, but so that's why how the price moves and closes tomorrow, whether it's below this or above this, is going to be questions. Let's look at the support resistance for the Banknifty. So first resistance would be the 48,200 nearby zones, which is the previous swing highs. After that, all-time high at 48,636, and then 49,000 will be the next top. Supports down, the first support will come in at 47,100. That's where the 23.6 Fibonacci retracement is there. Then you have the 48,880, right? That's where the 20 expansion moving average support is there. Then you have 46,520. That's where the 50 expansion moving average support is there. Then we have a 48,000. That's a big rounding number, plus a 100 expansion moving average. That's the support and resistance levels for the bank. Let's Bollinger Bands also we will see quickly. We can see that Bollinger Bands still expanding. Slight bend is taken, but no contraction yet. So expanding Bollinger Bands on the daily indicates that more up more can be anticipated, and that's the same case in both indices. Yeah. Let's get to this wrap up. So we have a negative close. One Nifty did that sharp fall from the very top and managed to close above the 22,300. It's a sharp 161 points, less than 1%, 0.72% of fall today. But a wide range bearish candlestick was formed, and potential evening star pattern threat also lies there. Remember, it is closed above the 20 expansion moving average. After all this, and everything is fine. We just had a 4.5% of correction for a 34% right kind of rally. Banknifty has also made a sharp fall after taking a small pause on Friday. Basically, Friday both indices took a small pause. A red bearish candle, indecisive candle was formed in Nifty, and a slightly bearish candle was formed. So after this pause, you have the Big fall with formed a wide range bearish candle there as well, with the potential for a remaining star if you consider the middle candle as small body. But it managed to close above the 47,300 and still above the 20 exponential moving average. So it is still trying to move above the 8.5 curve retracement that it had earlier done in a 26% kind of rally. The intraday was trendingly up, downfall, falling down in both the indices. Interestingly, today's data shows that the foreign institutions have bought 4,212 crores in the cash market. And that's the fourth day of consecutive buying by the Fyers. This is what we are always wishing for, right? There is happening around 15,000 crores of cash market purchases happen from the foreign institutions, which is a good thing. And domestic institutions also bought in 3,200 crores in the cash market today. So that means it is the retailers who just profit booking or got banned due to something. So basically the selling happened from the retailer side, not from the institutional side today, which is positive. Now the resistance and support zones we already discussed. I'm not repeating that. Go back to the previous sections and you can understand that. The momentum has flipped, that's the bad part. Go to the sharp fall for it is the momentum had slipped from the bull zones into the sideways on both the indices. The trend is yet to cross over the bear zones, but it's fallen. Right? The trend has weakened and it's falling. Weakened and crossover could happen anytime. Right? So that will be confirmed tomorrow. If that confirms tomorrow, then we go back. It'll take some more time for it to consolidate and then more picking. Or it could turn out to be more retracements that can come in with sharper. Otherwise, when the market falls, the VIX actually spiked up. It's not negative, it is plus. It spiked up nearly 3% and then it's at 13.9, which is normal. But VIX is spiking back to the 14 plus again. It's not a good thing because it goes out of the low volatility once again and then. It had cooled off substantially on Friday. But yeah, VIX behaved normal in line with the price movement with a spike of 3%. Bollinger Bands, we already seen that it's still not contracting, it's still expanding on the upside on both indices and for potential up moves and on the daily charts. So technically market had gained momentum in all that Friday, but unfortunately it had not Friday, gained momentum the previous week actually. But it looks like it has lost most of that gains, not all of it, but a lot of the momentum and the trend is lost today. And it has fallen back to very crucial supports, neckline of several breakout patterns, and potential change of polarity is also there at that zone. Banknifty, which had gained strength and will come out of that resistance zone previous week, today lost the momentum and the trend, but still managed to close about the 20 exponential moving average, and the price action are higher low pattern, so that formation is still on. But this evening star pattern that we see, if it works out, then it could mean more retracement to come. Otherwise, if it fails, then EIP bounce happens, then things are fine. Yes, we could assume that it was just a profit booking. Right. So that would be where the all eyes would be. If it's going to be some more bearishness leading to retracement that comes in, or is it going to consolidate here and then take the next breath to move further up along with the Banknifty, which has already shown the strength previous week. No, obviously today all the major sectors are closed red except for the farm, which is flattish green, and it's only two major indices, sectoral indices, auto and the farmer, that's showing the bullishness now, and it's because of reality in the metal had fallen sharp because of the sharp fall. Today's fall has fallen sideways momentum on the daily, along with the FMC reality, which is already in the sideways momentum daily. Heavyweights are all closed red along, except for the TCs are showing some green. And the thing is, among the heavyweight stocks, none of them are maintaining the bullish momentum that is RSI above 60 as of now. And all the major heavyweight stocks, the ICICI Bank, the Reliance, the HDFCs, ITCs, the TCS, all of them are on the sideways momentum. And Nifty is in fact fallen to the bear zones. That's less than RSI 40. Right, so that's kind of concern that there's none of the heavyweights that's driving the market, holding it high. It was the Reliance and the ICICI Bank that was doing that, but They have slightly slipped in the sideways. Hope it catches up tomorrow. US indices were at the very top, and then they're showing red as of now. You could see a 0.5% to 1.5%. Nasdaq had fallen 1.5%, and so that kind of falls there in the red. It's at all-time high levels. Retracements, consolidations, and all these things could come in since US markets or US indices also have been doing so rally just like ours. So to keep a close watch because US markets are the mother markets. We're only showing some flattish green with about 2.7, but the rupee remains to be at really close to the 83 levels and still weak. Crude oil is showing some flat red at 77 point, and it was heading towards the top of the channel, but still in the trend line channel remains to be there. Coal had made an all-time high recently. It's consolidating after that big breakout. It's flat red right now, but very close to the all-time high at the very top. So as I always say, the dips like this could be investment opportunities in quality stocks in SIP for long-term investment. But from a trader perspective, what matters is there direction or not direction. We hope for a direction the previous day when both indices has gained on the momentum of the trend, but as of now it has fallen back sideways, so the direction is gone. We'll have to still wait for option buying directional calls or directional strategies in that sense. No directional will be the one to apply till that is confirmed. So, but the IVRV spread is not that great, but it's okay. Still a little bit in favor of option sellers, 30% or something, and the IV percentile is also very high, so option sellers make some money. May still make some money, you could say. So tomorrow we have the Nifty weekly expiry. The option levels for the options is showing that 2400 where the highest put writing is there, and 21,000 where the highest call writing is there. Put call ratio is bearish, actually 0.64. Right, so that's not bullish. So we're going to keep a look at this, and we are putting a bets at that range of 600 points range. It's pretty wide with the day before the expiry, right? But it's bearish primarily, keeping all of that. Yes, I always say, play it safe. All the analysis will go for a toss when black swans will come in. So you have to keep your portion size and manage your risk properly. That's all that is there in our hands. Otherwise, technical charts analyzing that is only telling us the probabilities where the price may face a resistance, or the probabilities where the price may find some support. That's all, right? That'll be there, and then that's all I have for you. Safe trading. Happy learning. Bye bye.